There's always a little bit of theatrics when it comes to OPEC, and where we are today, we don't have a deal. They've got 2 days to hammer things out. There was a committee meeting yesterday, just to recap from where we are, and Russia came in, and the Russian Energy Minister, Alexander Novak, met with the Saudi Energy Minister, Prince Abdulaziz bin Salman. They had a bilateral meeting, then they had this committee meeting, this advisory committee meeting to try and hammer out a deal, and they're still far apart. We know that the Saudis have been pushing for a OPEC plus cut of 1 million barrels per day or more. And the Russians basically said, we don't think we need deeper cuts. We're comfortable with oil prices at this level. And so the onus is on Saudi Arabia to prove to us that the situation is dire enough to do something. Now we're seeing a lot of, as you mentioned, demand destruction in the market because of coronavirus. And we've seen some analysts come out with forecasts of 2020 demand actually going negative. It would be the first contraction of oil demand since the financial crisis in 2008. So it is a dire situation. Russia, Alexander Novak, he's gone back to Moscow for more consultations with Vladimir Putin to kind of see what the Russian position is. Today is all about OPEC. OPEC is going to meet amongst themselves. They're trying to hammer out a deal, and there's no guarantee that they're going to be able to get a deal either, because even though Saudi Arabia, the de facto leader of OPEC, they want a deal, there are some members that are yet to be convinced. We had the head of the Libyan National Oil Corporation come into town yesterday, and he said he doesn't think OPEC should cut production. Now it's a little curious because Libya is exempt from the production cuts. Perhaps it was a political message to the UAE and to Saudi Arabia, both of whom are very heavily involved in Libya's domestic politics and the civil unrest there. Maybe it was a coded message to them to stop meddling and let our exports out because of the civil unrest there. We have at the previous meeting, Angola wasn't on board with deeper production cuts. So there's still a lot of talking to be done. There's no guarantee that Saudi Arabia is going to clinch a deal. And likely if Saudi Arabia wants a deal, they're going to have to do a lot of the heavy lifting themselves.
So Herman, what is the most likely scenario from this point on? Because you could also suggest that any cut of less than 1 million barrels would be negative for the market.
Well, we've seen a lot of proposals floated out there by various sources and delegates in these talks, anything from 600,000 barrels per day of additional cuts up to 1.5 million barrels per day of additional cuts. And that's officially what this advisory committee yesterday recommended. Now, that was without the endorsement of the Russian energy minister, who, like I said, he went back to Moscow. So, we've done the calculations at Platts. If there's a 1 million barrel per day cut, that's going to bring OPEC production back down to about 27.5 million barrels per day. That is 2003 levels of OPEC production. That's before countries like Angola and the Republic of Congo were even members of OPEC. And it's also at a time when Iraq, a lot of its oil production was offline after the US-led invasion that toppled Saddam Hussein. So it was a much different oil market back there. And just to put all that in context, a hat tip to my former colleague and good friend John Kingston, now with FreightWaves, for pointing this out the other day, that in 2003, total global demand for oil was about 78 million barrels per day. We're now in a 100 million barrel per day oil market out there. So that's how much the market has expanded. And OPEC is now talking about contracting its oil production back down to 2003 levels. So, I mean, that's how much that's how dire the situation is for Saudi Arabia and those within OPEC who want to cut. They're willing to go give up that kind of market share to prop up prices because of their economic situation.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.